If we try to map now the key lessons of digital against the problems of financial services, that's where we can discover Greenfield. What are the models that fintech and banks have both not done yet that we really need to do and that match the pattern of digital disruption that we see in the industry where end customers win and nothing else matters? Hey everybody, I'm excited to do this. I wanted to talk today about the top 5 greenfields that I see in fintech from working with quite a few fintech startups, having worked in senior strategy positions at banks, looking at innovation, digital transformation, digital strategies before. There's a bunch of stuff that hasn't been done by either banks or fintechs, and there's big wide open greenfields to go and take in the years 2018, 2019, 2020. The first thing you have to ask yourself is, what is the addressable market space here? Almost everybody uses money or invests in some way and pays for things in some way, and that has become the fintech space. That's why there's so much attention and focus on it. Almost no one is happy with the fees that banks charge, the vested interest that banks have in terms of suggesting products or services, using things like credit cards, short-term lending. It all feels wrong to people, and that's why there's such a focus on this. At the same time, if you look at the wider umbrella of digital and what it offers, a lot of the stuff that we need to do hasn't been done. So forget GAFA, Google, Amazon, Facebook, Apple, social media stuff for just a minute, and take a look at the wider umbrella. New value propositions. With Wikipedia, you get credible, structured information. With Airbnb, you get to look at short-term housing. With Amazon and Alibaba, you get to go source and buy stuff that you need. With TripAdvisor, you kind of seek a holiday destination and how you can frame out your own trip. With Uber, you seek to travel right now within short distances. The digital services that we've got today, and they go on and on and on, are much better than the services that we got 10 years ago. So digital offers a wide space for innovating together with clients to create new services. What are the 2 key lessons of digital for the world? As I see it so far, the first one is people are loyal to nothing. Your Hilton points, your Swiss points or United Airline points no longer mean much at all. Digital means you can choose the most convenient service for you, going online and looking at things through a price transparent lens and finding out how do I best interact with this service or the end provider. All a digital company really needs is an email address and a credit card number, and you're a customer. And once you're a customer, you've got your data, you're a customer for life. I'm very loyal with the digital services that I use, and there's literally dozens, if not more, of digital services that have piled up in my life over the years. The second thing about the 2 key lessons of digital that is common throughout all of them, the red thread of digital seems to be that these companies don't own anything. They typically run on very thin infrastructure with very few employees so they can scale wildly, exponentially. Their products or services come together with end customers in a very simple, easy way. It's convenient, and you can reach a mass market with digital. So to me, those are the 2 key lessons of digital, both of which banking don't get. I don't think that anybody's super loyal to any particular bank for any one reason other than it's a pain to go join another bank. You have to do all the paperwork process, get to know more people, have uncomfortable discussions again. So, nobody's super loyal to a credit card or a bank. So it is a ripe area for, so-called disruption or innovation. What's the issue with financial services trying to do this stuff? First of all, from a bank perspective, they're trapped in their own filter bubbles. They're caught up in their own process of selling investment advice. We're the best at custody, we're the best at transactions, we're the best client advisors, we have the best army of people working for us, all of which is never true, right? Because the industry has spread itself out and has been operating for literally more than 50, 60 years, if not hundreds of years in some of the subcategories of industry. Banks are trapped in their own IT cycles. There's long time frames to change things. They're trying to keep up with regulation, and they're not very customer centric at the end of the day. They still have to make margins. They're under serious margin pressure. That's the second big aspect to this, especially in the more high-end businesses like wealth management and private banking. If you look back just fact-wise, the past 10 years since the financial crisis, it's been 10 years, 2007 to 17, private banks and wealth managers have lost more than 1/3 of their margins, and that stuff is not coming back. In fact, I assume the rate will keep accelerating under pressure from the great digital services of the world. Clients expect that things race towards free, right? I've never paid for LinkedIn, Twitter, YouTube, Google, Amazon, all the things that I use, I don't actually pay a direct fee for. And therefore, that's become my basic expectation of the world, is that commodity services, I can source myself for free and I can have a more transparent view and a convenient approach towards things. So, the banks, and especially the more high-end banks, are in big trouble. I would see the pace of change continuing exponentially to decline in terms of margins to the point where, in 10 years from now, they'll be at sort of 20% left of the gross margin of what they had in 2007. So they can't take out back and middle offices, processes, and change things fast enough to keep up with that pace of change. So I think the demand for a pace of change will continue from a client perspective. Digital is an overarching theme that puts more pressure on margins, and the ultimate killer of the technology, the new protocol coming of blockchain, actually makes custody and transaction fees, or what's known as brokerage, become even closer to zero marginal cost. So it really becomes a commodity in the world where everything is online and exchangeable from any sort of products or service, especially tied with money. And so, all of those pressures will continue the downward trend for banks. Now, fintech has come along. Fintech was always there since 20 or 30 years in terms of financial technology. However, from a tech and user experience angle, it really changed in the past 5 or 7 years, but it hasn't really picked up a mass adoption. So the last miles to clients, which seem to be most of the focus from Robo advisory and peer-to-peer lending, they really haven't made a huge dent in the banking empire that exists today. When it comes to putting $1 million into a bank account, you do want to have a certain level of security that you trust, and nobody seems to be ready to do that with Google or YouTube. If we try to map now the key lessons of digital against the problems of financial services, that's where we can discover Greenfield. A lens of color and saying, let's take yellow and blue together, layer them over each other, and what do you get? You get kind of green. Those are Greenfields. What are the models that fintech and banks have both not done yet that we really need to do and that match the pattern of digital disruption that we see in the industry, where end customers win and nothing else matters? Here's my top 5 new value propositions. It's stuff I'm not seeing in fintech. This is a call to the fintech community. This is what I want to see. I work at F10 in Zurich. It's no big secret. I want people to come here with their best startup ideas, but just be able to launch those startups into places that really matter. So I'm personally not into another payment company or another strategic asset portfolio allocation company or another research consolidator. I really think there's some big stuff to do, and those are what I call the Greenfields. My top 5 favorite hypotheses that could leverage digital properly. The first one, let's call it under the project code name Open. I want to be able to compare and choose my own advisory services, whether that's an offering for a banking service that includes payments and credit cards and debit cards, or it's more into the higher end of stuff of managing an investment portfolio. I want the comparison version of everything, and I want to know what other people have experienced in it. So very much a TripAdvisor model or an Airbnb model where I can open source things, not just looking through a travel agent at the lens of a hotel or a cruise ship, but being able to say in the year 2017, I can pick anything that I want and I can compare it. That really hasn't been done very well. My prediction for this whole space is that it's a winner-take-all space. It's a very big space that the banks won't be able to do because it doesn't make sense to them as a business model. I think that Google is the best positioned in terms of Western big data companies and brands with billions of over 1 billion customers. I think they'll be the one to figure it out first and do it first. In terms of, when you type in something for financial planning, financial advice, get a mortgage, I think Google will be the one that's directing the traffic, and he who directs the traffic will have the data. He who has the data will win in terms of, being able to predict where the customers go and to monetize off of that. So how it monetizes, I think it's not from the banking service. I think the underlying banking service is free, but I think like Google, they make billions and billions a year. The second trend is something that we'll call the project name Now. It's proactive, personalized advice when I need it the most, from kind of a best interest perspective, my own best interest. I think of the minimum viable product of this for the fintech guys out there as submit your spreadsheet. So in the mass affluent world and in the core affluent world, there's 2 different markets. Mass affluents are people with sort of more than 50,000 investable. Let's call core affluence people with more than 250,000 or 500,000. However you cut it, as you move up the chain in wealth, people do take more of an interest in managing their finance. They may have more providers, multiple pension accounts, multiple savings accounts. They may be cross-border clients. They may have, multiple jurisdictions, and they may own businesses. So they get more complex as they have more wealth, typically. And people end up doing this weekend warrior spreadsheet stuff. It's a huge pain to have to manage your own finance in that way. But if you work with just a single bank or multiple banks, what they're managing is your financial portfolio or your current account or your mortgage, and they see it as a bundle of different products. But it's very hard to manage that holistic view of everything. I think that's where fintech could make a big play and say, with the advent of MiFID and PSD2, my data is my own, my profile is my own, and I want that 360 picture of everything, and I want advice off of that 360 picture. A prediction for me in terms of who will own that, I think that's a second wave of robo advice that gets much more personalized, uses personal data and recommendations in a much better way, more like an Amazon and Google do. And I think it's a whole different wave of robo-advisors that will come that exit the strategic portfolio just looking to invest your spare assets into secondary markets and will more care about you. So to give you more advice, literally you'll be able to, everyone will upload a free-form spreadsheet. This is what I have, and then it'll give you back 3 tips of what to do. The third one is, I'm calling it a project around me. The project of me is, what do you care about in your circle, in your community, and what do you want to invest in? So let's say you have some cousins or friends or brothers and sisters who you'd love to lend to. You have excess cash, but there's no process in terms of diligence, in terms of following things up, setting interest rates with people, what's the right thing to do actually. So the people and the projects you'd most like to invest in, it could be local housing improvements or an old age home locally that you want to invest in or work with. There's no process by which you can actually get involved with it financially. So that lingua franca of, connecting your finance with the things you actually are passionate about or care about could be development projects in your local community, or it could be in an international context. It never enables end clients in the current state of play to be able to invest in those things. There's Kickstarter and Indiegogo, but those are kind of wacky products that you just want to be an early buyer of. I'm talking more about things that you want to move in the world, you want to change in the world, or you just want to support people that you care for, other than just sending them cash. So the co-investment model around me, I think, hasn't been done. Is that this one kind of arrives from the Silicon Valley players. Someone big and powerful like an Adapar takes this one on and says, we can really generate a product out of this by giving people local recommendations or enabling them to invest in what they want to and giving them all the services around that. Pretty hard to explain exactly what I mean, but if you want more details, drop me a comment or a direct message. The fourth one is one of my favorites. It's what I call Panorama. If you talk with any of the higher end banks in the world, they'll talk about having a perspective around all of their clients' wealth, but in the end, I don't think many of the banks have really gone beyond financial portfolios or basic mortgage products, housing. No one provides clients valuations on their business on a regular basis, for example. And we know from research that the clients' businesses in the more wealthy area may be more than half or even up to 70 or 80% of their actual total net wealth. At the same time, art wealth is a huge area where 5 to 10% of more wealthy clients' assets may actually be artwork, which is held in various places in the world, or it may be in their second, third, fourth homes, could be in their yachts, and none of that is really covered on a bank statement. So what I'm talking about here from Panorama is, how do you put everyone's total assets and net worth on a page, including their family values, their education, real estate, property values, their businesses, and really start to advise across that whole picture. That Panorama is a ripe area for any kind of tech who can do open API to services. So if you look, for example, at Zillow in the US, you can source open real estate properties on anything in the US, which is commercial, private real estate. I'm sure that we can do the same in a commercial real estate sense. There are startups working on it. So I think, the fintech or company that I'm looking for here has to be able to put together the pieces and say, I can get art valuations, I can get boat valuations, airplane valuations, I can figure out business valuations, and then I can provide advice or additional services off of those that we haven't thought of yet, that the bankers haven't thought of yet. I think that, having a panorama view and then giving a new level of advice, so you have options to launch new innovations in your business actually, or take a look at what these guys are doing. They're very similar to you, and they launched new businesses off the back of this year, or other people like you actually sold off all of their classic artwork in the past 3 or 4 years. Did you know that? So start to provide more of a meta layer of advice rather than just talking about ETFs, funds, and stocks and structured products, which is super boring. The fifth one is my absolute favorite one. It's more of a base layer of finance going forward. It's one that the banks should actually do first, I hope, which is get our act together when it comes to this new protocol of blockchain, which means stop working on digital currencies, stop tweeting about ICOs and looking at your LinkedIn articles about that, and actually work on what needs to be done, which is putting back holistic advice around a blockchain protocol world, saying how will we do valuations of things, how will we provide diligence services, how will we ensure that transactions for our clients have been done in a secure way and that everything went through the way we thought it should. And at the end of the day, how do we monetize for advice overall that we're providing a client? So it's kind of, looking at the investment bank and wealth manager of the future all in one, to saying at a very high level, how does blockchain affect clients' world, and what are the services that they will actually expect of a banker in the future? The custody and the transactions will be free, they'll be done in the background. So that's the commodity level. You won't be able to monetize off of that. So you still have a valuable role as a banker. There's so many different assets you bring to the table. And what I'm trying to describe is really, monetizing for those things that you're doing and providing its services. So I think this project, which I kind of call Project Chain, is look at all the different services, the new P&L lines, the new revenue that banks should be creating off of blockchain. My prediction here and my hope is that the banking industry will get its act together quick enough on this one. There's a very high interest in the whole blockchain space, and be able to keep up and actually lead the way on this one so that we have a viable future for everyone working in banking. Kind of my 5 sets of things that I haven't seen in fintech or in banking yet that I'm really looking for. I'm actively scouting for that stuff, and I hope to see it soon. So if you have any comments or ideas about this stuff, either DM me or put it in comments below, and I'm always happy to discuss, and I always answer the comments. Thanks.